3 cities, 3 continents. In Medellin, Pablo Escobar is moving $15 million in cocaine revenues that need to disappear before the DEA traces them. In Langley, a CIA handler is arranging the transfer of $30 million in covert operational funds to a network of Afghan Mujahideen fighters that Congress has not authorized and must never know about. In Baghdad, Saddam Hussein's government is processing a $50 million arms purchase from a European supplier through a financial channel specifically chosen because it cannot be traced back to Iraq. 3 transactions, 3 of the most dangerous men and organizations on Earth, and every single one of those transactions on that day, in that year. And for over a decade on either side of it flows through the same bank, the same accounts, the same institution, the same marble-lobbied, pinstriped, perfectly respectable international financial organization with branches in 78 countries and assets of $20 billion. Its name was the Bank of Credit and Commerce International. Its employees called it something else. They called it BCCI, which stood in the unofficial, whispered language of the people who worked there and knew what it was for the Bank of Crooks and Criminals International. And for 19 years, while regulators in 7 countries looked the other way, while politicians on 3 continents accepted its money, while intelligence agencies on both sides of the Cold War used its infrastructure for operations they could never officially acknowledge, it stayed open. This is the story of how and why. To understand BCCI, you have to start with the man who built it, Aga Hassan Abedi. Born in Lucknow, India, in 1922. Educated, charming, visionary in a way that made everyone who met him feel they were in the presence of someone genuinely extraordinary. He had spent the 1960s building United Bank Limited in Pakistan into one of the country's largest financial institutions. When Pakistan nationalized its banking sector in 1972, Abedi lost everything he had built. Most people in that situation retreat. Rebuild slowly. Start smaller. Abedi did something different. He looked at the global financial landscape of the early 1970s and saw something that almost nobody else had identified yet, a gap. Not the kind of gap Arthur Budovsky would find in the digital world 30 years later, but the same fundamental principle. A space between jurisdictions, between regulatory frameworks, between the oversight capabilities of any single government and the reality of a truly global financial institution. If you built a bank that existed simultaneously in enough countries, incorporated in enough jurisdictions, with enough political connections and enough capitals, you could create something that no single regulator could ever fully see. No single government could ever fully control. No single law enforcement agency could ever fully penetrate. Abedi called his creation the Bank of Credit and Commerce International. He registered it in Luxembourg and the Cayman Islands, 2 jurisdictions chosen with surgical precision for their loose regulatory frameworks and their resistance to international legal cooperation. He opened branches across the Middle East, Asia, Africa, Europe, and the Americas. He recruited some of the most respected names in global finance to sit on his board, giving BCCI a veneer of institutional legitimacy that would take investigators years to penetrate. And he built, into the very architecture of the bank from its first day of operation, a parallel set of books. A secret internal accounting system known inside BCCI as the Black Network that tracked the bank's real activities separately from the official records that regulators and auditors were allowed to see. The Black Network processed the transactions that could never appear in official documentation. The drug money, the arms deals, the intelligence agency transfers, the bribes to politicians and regulators. From day one, BCCI was not a bank that became corrupt. It was a criminal enterprise that was designed to look like a bank. And for 19 years, the disguise held perfectly. The early growth of BCCI is extraordinary. By the mid-1970s, barely 3 years after opening, BCCI has branches in 32 countries and assets of over $2 billion. Abedi's pitch to clients is sophisticated and targeted. To legitimate businesses in the developing world, he offers banking services that Western institutions have historically denied them. Access to global capital markets, trade finance, letters of credit. To governments in the Middle East and Asia, he offers discretion, political sensitivity, An institution that understands the complexities of moving money in parts of the world where Western banks ask too many questions. And to a third category of client, the category that will eventually define BCCI's true legacy, he offers something more specific. Complete anonymity. No questions. No documentation requirements beyond the absolute legal minimum. Transactions that move through enough jurisdictions and enough corporate layers that their origins become effectively untraceable. By 1980, BCCI has $10 billion in assets. By 1985, $20 billion, operating in 78 countries, employing 14,000 people worldwide, most of whom have no idea what the bank is actually doing. But the clients who do know are some of the most dangerous people on earth. Let's talk about the three clients. Because understanding who BCCI served and how it served them simultaneously is the only way to understand why this story matters beyond the money. Client 1. Pablo Escobar. By the early 1980s, the Medellin cartel is generating an estimated $60 million per day in cocaine revenues. $60 million. Every day. The logistics of that much cash are staggering. Physical currency takes up space. It has to be counted, stored, moved, and eventually converted into something that looks legitimate. The process of doing that, moving drug money through financial systems until it emerges as clean, legitimate capital, is called money laundering. And in the early 1980s, BCCI becomes the Medellin cartel's primary laundromat. Cartel cash is deposited through a network of shell companies and intermediaries into BCCI accounts across Panama, the Cayman Islands, Luxembourg, and the United Kingdom. It moves through the black network, bouncing between jurisdictions, changing corporate identities, accumulating documentation that makes it look like legitimate business revenue. It emerges on the other side as clean capital available for investment in legitimate businesses, real estate, and financial instruments. U.S. prosecutors will later estimate that BCCI laundered over $14 billion in Medellin cartel proceeds over the course of the relationship. $14 billion made to disappear, in plain sight, through a bank with marble lobbies and a board of distinguished international directors. Client 2, the CIA. This is the part of the BCCI story that the U.S. government has never fully acknowledged. In the late 1970s and early 1980s, the CIA is running covert operations on a scale and in a manner that creates serious financial logistics problems. The most significant of these is the funding of the Afghan Mujahideen, the resistance fighters battling the Soviet invasion of Afghanistan. Congress has authorized some of this funding, but the full scale of the operation and the specific channels through which money moves is something the CIA needs to keep off the books. BCCI, with its network of accounts across Pakistan, Afghanistan, the Middle East, and the Cayman Islands, is perfectly positioned to move this money invisibly. The relationship between BCCI and the CIA is documented partially in a 1992 U.S. Senate report by Senators John Kerry and Hank Brown. The report concludes that the CIA was aware of BCCI criminal activities as early as 1985. And that rather than shutting the bank down, the agency actively used it. Because BCCI could move money to places and people that official U.S. government channels couldn't reach. It could fund operations that couldn't be officially acknowledged. It could provide the financial infrastructure for the kind of covert action that defined American foreign policy in the 1980s. The Senate report stops short of saying the CIA ran BCCI, but it documents something almost as disturbing: that American intelligence knew what BCCI was, knew who else it was serving, and chose deliberately, consciously, to keep it open. Because they needed it. This is where things get truly dark. Client 3. Saddam Hussein. By the mid-1980s, Iraq is fighting a brutal war with Iran. Saddam Hussein needs weapons. He needs them in quantities that dwarf what official arms sales channels can provide. And he needs them through channels that can't be traced back to the government supplying them, because many of those governments are simultaneously selling weapons to Iran. BCCI facilitates this through a network of arms dealers, front companies, and intermediary accounts that move Iraqi arms procurement funds through enough layers of corporate structure that their ultimate destination becomes invisible. The bank also, according to documents obtained by the Senate investigation, processes payments connected to Iraq's chemical weapons procurement program, the same program that would eventually be used against Kurdish civilians in the Halabja massacre of 1988. Money that moved through BCCI, through the Black Network, through accounts in Luxembourg and the Cayman Islands, to purchase the precursor chemicals for weapons that killed 5,000 people in a single day. And somewhere in the marble lobbies of BCCI's London headquarters, those transactions were processed by employees who in most cases had no idea what the numbers they were entering actually funded. 3 clients. 3 of the most consequential criminal and geopolitical actors of the 20th century, all banking at the same institution, all protected by the same architecture of secrecy, all relying on the same black network to keep their transactions invisible. And the regulators who were supposed to stop this? They were about to make the biggest mistake of their professional lives. The investigation that eventually brings down BCCI does not begin with the CIA, does not begin with DEA or the FBI or the Bank of England. It begins with a Manhattan district attorney named Robert Morgenthau, and a single tip from a customs agent in Florida who has noticed something unusual about a series of cash deposits moving through a Miami branch of BCCI. It is 1989. Morgenthau assigns investigators to follow the trail. What they find within months is the edge of something so large that it takes them 2 years to map it fully. Every thread they pull leads to another account. Every account leads to another jurisdiction. Every jurisdiction leads to another layer of corporate structure, deliberately designed to slow exactly this kind of investigation. Morgenthau's team works through 1989 and 1990 in close coordination with investigators in the United Kingdom, where BCCI's European headquarters is located, and with the U.S. Senate subcommittee that has begun its own parallel investigation under Senator John Kerry. Kerry, a Vietnam veteran turned senator who has spent years investigating the intersection of drug money and American foreign policy, understands instinctively what he is looking at. Not just a corrupt bank, a system, a deliberately constructed financial architecture that allows governments, intelligence agencies, and criminal organizations to operate in the same space using the same tools without ever officially acknowledging each other. Kerry's investigation faces extraordinary resistance from within the U.S. government, from the CIA, which actively lobbies against the investigation being expanded to include the agency's relationship with BCCI, from the Justice Department, which sits on a referral from Morgenthau's office for over a year without acting on it. Later investigations will conclude that this delay, this deliberate slowing of the federal response, allowed BCCI to continue operating for over 12 months after U.S. authorities had sufficient evidence to shut it down. 12 months in which the Black Network kept running, in which Escobar's money kept moving, in which the arms deals kept processing, in which 1.4 million ordinary depositors, Pakistani taxi drivers, Indian small business owners, African families who trusted a bank with a respectable name and marble lobbies kept putting their savings in. Savings they were about to lose. Everything is about to collapse. July 5th, 1991. It is a Friday. In London, at the Bank of England, regulators have been coordinating for months with their counterparts in the United States, Luxembourg, the Cayman Islands, Hong Kong, and 58 other countries. The operation they have planned is unlike anything in the history of international financial regulation. Because BCCI's entire architecture, the deliberate distribution across 78 countries, the multiple regulatory jurisdictions, the layered corporate structures means that shutting it down in one country while it remains open in others will simply cause the Black Network to migrate, to move the money to wherever the bank is still operating, to continue functioning in the jurisdictions that haven't yet acted. The only way to kill BCCI is to kill it everywhere, simultaneously, in every country, at the same moment, before a single account holder, a single employee, or a single transaction can react. At 1 p.m. London time on July 5, 1991, the Bank of England gives the signal. In 62 countries, simultaneously, regulators walk into BCCI branch offices and seize control of operations. In London, in New York, in Karachi, in Luxembourg, in the Cayman Islands, in Hong Kong, in Abu Dhabi, in 57 other cities across 57 other countries. All at the same moment. Branch managers arrive at work to find regulators already in their offices. Customers lining up for morning transactions are told the bank is closed. Permanently, the black network, which has been running for 19 years, goes dark. In a matter of hours, the most sophisticated criminal financial institution in the history of global banking ceases to exist. What investigators find inside BCCI's records takes years to fully process. The scale of the fraud is almost impossible to comprehend. $13 billion in depositor funds gone. Loans made to shell companies that don't exist. Assets listed on official balance sheets that can't be found. Accounts connected to drug trafficking networks across 5 continents. Intelligence agency transfer records that multiple governments immediately classify. Arms procurement documentation connecting BCCI to weapons programs in Iraq, Libya, and several other countries. The political connections are equally staggering. BCCI had made payments to politicians and government officials in 73 countries. It had funded political campaigns. It had placed connected individuals on regulatory bodies responsible for overseeing it. In the United States, BCCI had secretly acquired controlling interest in several American banks through nominee shareholders, circumventing laws that prevented foreign ownership of U.S. financial institutions. All of it hidden. All of it running. For 19 years. The human cost lands differently. 1.4 million depositors. Ordinary people in Pakistan, in India, in Africa, in the Middle East, who had trusted a bank with their savings because it had a respectable name and offices in 78 countries and a board of distinguished international directors. Most of them lose everything. Recovery proceedings spanning decades will eventually return a fraction of what was lost. Most depositors receive less than 30 cents on every dollar they deposited. Many receive nothing. Aga Hassan Abedi, the man who built BCCI, suffers a serious heart attack before he can be prosecuted. He dies in Karachi in 1995. Never convicted of a single crime. Several of BCCI's senior executives are prosecuted in various jurisdictions. The sentences are, given the scale of the crimes, remarkably light. The CIA's full relationship with BCCI is never officially and completely disclosed. The classified sections of the Kerry report, the portions dealing specifically with the intelligence community's use of BCCI, remain classified to this day. Some things, even after everything, stay buried. The collapse of BCCI triggers the most significant reform of international banking regulation in the 20th century. The Basel Committee on Banking Supervision, the body that sets global banking standards, completely rewrites its rules on cross-border supervision. New requirements force banks operating in multiple jurisdictions to submit to consolidated oversight by a single lead regulator. The specific gap that Abedi had exploited the space between regulatory jurisdictions is formally closed. Anti-money laundering requirements across the Western world are dramatically strengthened. Know Your Customer rules, the requirements that force banks to verify the identity and source of funds of their clients, are made significantly more rigorous. The financial world that exists today, with its mandatory suspicious activity reports, its cross-border regulatory cooperation frameworks, its beneficial ownership disclosure requirements, is in large part a direct response to BCCI. The bank's collapse built the architecture of modern financial crime prevention, which is either a reassuring legacy or a deeply troubling one depending on how you look at it. Because every piece of regulation that emerged from BCCI collapse was a regulation that didn't exist while the bank was operating. Every safeguard was built after the damage was done. 1.4 million people lost their savings. After $13 billion disappeared. After 19 years of Pablo Escobar's cocaine money and CIA covert funds and Saddam Hussein's arms payments moved through the same institution, while 7 governments looked the other way. There is a question at the center of the BCCI story that has never been fully answered. Not by the Kerry report. Not by the Bank of England's investigation. Not by the decades of subsequent academic and journalistic examination. The question is simple. Did the governments that protected BCCI, that slowed investigations, classified documents, lobbied against prosecution, do so because they genuinely didn't understand what the bank was? or because they understood exactly what it was and needed it to stay open. The CIA needed a bank that could move money to places Congress hadn't authorized. Certain governments needed a bank that could process arms transactions that couldn't appear in official records. Certain politicians needed a bank that could receive payments that couldn't be explained to their constituents. BCCI didn't just serve criminals and intelligence agencies. It served a function that the official financial system, with all its transparency requirements and its regulatory oversight and its know your customer rules, simply couldn't perform. And the most disturbing implication of that fact, the conclusion that the Kerry report approaches but never quite states directly, is that the demand for that function didn't disappear when BCCI collapsed. It went somewhere else. Found new infrastructure, new jurisdictions, new corporate structures, new ways to move money that can't be officially acknowledged through channels that can't be officially traced. BCCI is gone. The need that created it is very much still here.